Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a technical look at the euro versus US dollar. Today's date is July 27, 2023. The ECB raised rates by 25 basis points. The Federal Reserve did the same thing yesterday. We were waiting for Christine Lagarde's press conference to begin. In the meantime, we saw better data come out of the U.S. Durable goods rose by 4.7%, well above the 1% expected. We saw initial jobless claims come in at 221,000, down sharply from the expected 235,000, and we saw continuing claims also move to the downside, which is a strong signal for jobs. We saw the GDP advance come in at 2.4%. Give credit to the Atlanta Fed, which correctly projected the GDP to grow by 2.4%. We saw the deflator advance by 2.2%. The core PCE price advanced by 3.8%. Both were lower than expectations, so good news there. We're seeing stocks move sharply to the upside, with the Nasdaq up 229 points. The Dow Industrial Average is on its way to its most consecutive day streak since 1897, surpassing the 1987 string of 13 consecutive gains. If it closes higher today, Dow is currently up 164 points. Let's take a look at the euro versus US dollar. What we see technically here is that the price high moved up and tested the 200-hour moving average before the ECB rate decision and the data dump. And since then, we've seen the dollar move sharply to the upside, the euro versus move to the downside. And the price is now below the 100-hour moving average of 1.1085. That is the now close risk level for traders. If the price can stay below that level, that would be more bearish. The current price is trading at 1.1075, so it's just below that level. I mean, we do have to give it some time, but the bears are trying to take more control. On the downside, we have this swing area here and the 50% retracement level. I probably use the 50% retracement as the next key target at 1.1053. Move below that level, and we could see further momentum to the downside. Note that in trading yesterday, especially in the New York session, the price moved back above that 50% retracement and tested it a few times here before rotating back to the downside. So there is support against that level. There was resistance earlier, so moving below that level will increase the bearish bias. Hold support against it, and we're in a battle between the 100-hour moving average on the top side and the 50% retracement on the downside. If the price should move back above the 100-hour moving average, watch the 38.2% retracement level. That's a broken 38.2% retracement of the move up from the July low to the high. That 38.2% was initial support in the trading last week at this point right here, and then became resistance this week here and here, and even here, even though the price moved above that level, tried to stay below that level, but bounced off the 100 on the way to the 200 and trading here today before moving to the downside. So getting above 1.1106 would be more bearish for that currency pair. So there you have it, a technical look at the euro versus US dollar from what the charts are telling us. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.